Monday, February 20th, 2017. Monaco 64, home of alternative economics and contrarian views. So it's President's Day in the US and Family Day in Canada. So the markets, stock markets in North America are closed today. So it's a fairly quiet day in the markets. Currencies are still trading, of course, in the European markets have been open. Futures markets have been open on the CME, electronic exchange. So right now, gold is at $12.38, up just over $3. In the spot, silver is at 18.06, up about 8. Dow is up 42 points. S&P up 5. FTSE is pretty much unchanged, around 7,300. And currencies, the only currency actually that's moving a bit is the pound. Pound's at 124.60, up 50 pips, mainly on the back of a story saying that a couple of lords, people in the House of Lords, they used to be MPs in the House of Commons. Now they're lords. Lord Mendelsohn and Kinnock said they're going to fight Brexit. And usually when you get news that looks like is going to hamper Brexit or a hard Brexit by the government, the pound tends to rally. So still a bit of volatility there. So I'd like to talk about a few stories to do with Europe because I think right now, especially in the US, you look at the the news, you go on YouTube, and even the news here in the UK, it's all about Trump, and it's all, the mainstream media being totally against Trump, putting his comments and, his cabinet's comments out of context. And then you had his press conference where he slated the mainstream media. So there's a lot of focus on this internal war in the US, the war between the Trump administration and I guess the deep state. So I'd like to focus a little bit on things that could be very important for the markets, going forward, especially in mid-March with the Dutch elections and then April with the French elections. So today there's a story here on Zero Hedge, and it says political turmoil returns to Europe. French-German spread blows out 5-year wides. What does that mean? Well, basically, German government bonds are the benchmark bonds for Europe. So they're the least risky, so to speak, and the most liquid government bond market in Europe. The German Bund is the 10-year Bund. That's called a Bund. The 5-year is called an Obel. So they have different names. The 2-year is called a Schatz. But basically the Bund, 10-year Bund yield versus the French 10-year Notional. Notional is the French government bond 10-year yield. The spread is widened to the most since, for 5 years. And right now, as I speak here, that spread is at, 76 basis points. And what does that mean? Well, that means that, the yield for French bonds is rising relative to the German yield. So that means that market participants are concerned about holding French paper, even though the 10-year notional yield is only 1.05. The Germans 0.29. But for the last month, for example, that spread has widened by 27 basis points, or so almost 30 basis points. And that's a big move. And I know the French yield is only 1.05, which is less than the US yield, which is 2.4. But if this keeps going on, this widening spread, it's a signal of worries in the market. The same thing is going on for Italy, for example. In the last month, the yield between the 10-year BTP and the 10-year Bund has gone up by 28 basis points. So Yeah, and the Dutch paper, though, we have the elections in March 15th, I think. Geert Wilders, who's like a far right wing candidate who wants to leave the euro, and I don't know, I'm not sure if he wants to leave the European Union, but finance wise, the Dutch, 10-year yield hasn't really moved that much. The spread to Germany is around 33 basis points. So it's more of a looking at the French and the Italian, I think, and also the Greek. Another story today, German minister calls for Plan B. Greece should pledge gold, real estate for new loans. So it just goes to show that when the things come to the crunch, people want real things. They don't want, the German minister doesn't say, oh, let's have some Greek government bonds as collateral. They want gold and real estate, which are real things. So that just goes to show, for a small investor as well, that makes sense. I'm not saying you should buy real estate leveraged, with a huge mortgage. No, it's a safety thing. Have property that you've got paid for if you can. That will always hold its value. It will be there in 20 years. There's this interesting story about, I think it was in East Germany after when the Soviets occupied the eastern part of Germany after World War II. I've heard stories that a lot of Germans who own property in eastern Germany, which became East Germany, they would, put the deeds to their property in a safety box. They would dig their gardens and they, put the deed in the hole and concrete over it. So that, if ever Germany, the Soviets left and East Germany collapsed, they could go back there and take the deeds out and they'd still have the property. So that's an interesting point here. And talking about gold as well, the German minister says, and I read here, let's see, Bavaria's 50-year-old finance minister Markus Söder was previously named by German weekly Der Spiegel as one of the 10 most dangerous European politicians, defined as every politician who is resorting to cheap populism in order to rack up domestic political points. But he says here, during the Greek government debt crisis, Söder was among the most vocal in calling for Greece to leave the Eurozone. By 2012, he said in an interview, Athens must stand as an example that this Eurozone can also show teeth. And then it goes on to say, and now, according to an interview with Bild, the CSU politician said that, and I quote, new billions should only flow when Athens implemented all reforms. Even then, however, aid should only be given against a pledge in the form of cash, gold, or real estate. We need a plan B. So it's it's like the European Union is acting as a pawnbroker to Greece. And they don't want government bonds. They want cash, gold, or real estate. So looking here, with that in mind, I went into Wikipedia for gold reserves, and it gives the list of countries who have the biggest gold reserves in the world ranking. It says the United States is number one, supposedly 8,133.5 tons, even though we haven't had an audit since the 1950s of U.S. gold reserves. What I suspect is at current prices, maybe they do have this amount. Actually, they don't have this amount at current prices, but if they really had to show the gold physically in an audit, the price would have to rise because they'd have to go in the market and buy the stuff. I think, a lot of the U.S. gold is not there anymore, or might have been leased to other third parties. Germany is number 2 with 3,377.9 tons. Italy well, IMF, it says is number 3, but I think the IMF gold is really gold pledged from the members of the IMF, so I don't know if I'll count that. Italy is number 4 with 2,451 tons. France, number 5 with 2,435. China officially only still has 1,838, but it's number 6 now. Greece is number 32 with 112.7 tons, which actually is 63% of their foreign exchange reserves. And compared to, the UK, which is a much bigger economy than Greece, it's not bad because the UK only has 310 tons, which is only 9% of its foreign reserves. So, yeah, interesting that, it goes to show people, that you need to be your own, central bank. I've said that in the past. Jim Sinclair, he's the one who really started saying that years ago. I think Greg Manarino says that. So, because in the end of the day, that's real money, gold and silver. So, and property as well. You could have a property be in the family for 30, 40 years, and it's still, you could, like in Brazil, where I'm from, for example, you could have had 3, 4 different currencies in the last 40 years, but if you have a property from 30, 40 years ago, it will still be worth something today. But if you had Cruzeiros from 35 years ago and you kept it in a safe, it's totally worthless. So I thought that was interesting, that this German minister said that Greece has to pledge gold and real estate if it's going to borrow more. So, yeah, I think we need to keep an eye out on the European bond markets a little bit and what's going on in France, because it could, mean the next, March, April, the next 2-3 months could be really important. It could be the death of the euro, the breakup of the euro. And a lot of people, I have a friend of mine, I talk to him regularly, he still works in the city, and I said to him, actually, if Holland leaves or if Italy leaves, the euro might not collapse right away. You could have countries like Finland and Germany and Austria still in the euro. And without Italy, the euro might even go up. You never know. I think it's, the people who say, oh, the euro is going to collapse, I think that's a little bit exaggerated because, yes, the euro might break up, but that's different from collapsing. It might break up and go back to the different national currencies, but those national currencies, even though they'll probably be worth, be devalued relative to the euro, they'll still be worth something. But it could cause a lot of turmoil in the investment banking system because it could create havoc because a lot of OTC derivatives are based in euros. What if, we have to start dealing French francs or Italian lira? What happens to those derivatives? It could be a mess. And of course, it could help the dollar short term and even the British pound. But I've heard like from Lindsay Williams in the past, and when he used to have the elite friend, that friend has passed away a few years ago. And one thing he said is that if the euro goes, once the euro disappears or crashes or plunges, yes, the dollar might go up a bit and the pound, but the next currency to go will be the dollar. And I kind of agree with that because it will just show to people that the fiat money system is on its last legs. The dollar might get a bit of a respite, which is already getting, you know, a bit in the last 6 months. So that's it for now. If you enjoyed this video, give me a thumbs up, share it far and wide. If you haven't subscribed to my channel yet, please do. If you'd like to donate to my channel, there's some links below in the description. I'll talk to you later. Take care. Bye.